Hello, welcome to another video. This time I'll be talking about funding rates in futures trading. Nothing in this video constitutes as financial advice. I'm just a random guy on the internet who goes by the name of RunnerXBT. In the description you'll find timestamps to specific parts of the video. I assume that most people watching this are trading cryptocurrencies on centralized exchanges like Binance, Bybit, OKX, etc. So this video is tailored towards people trading crypto and focused on altcoin trading. So firstly, I need to give a bit of context. If you buy spot, you can withdraw the asset from the centralized exchange to your software or hardware wallet. Technically speaking, they're your coins. You can buy them, sell them, stake them, or hodl them, whatever you wish. Just keep in mind that there's always counterparty risk involved if you hold them on centralized exchange, just like we had experience with FTX. But then, on the other hand, there are derivative products. Derivatives are financial products whose value is derived from its underlying asset. So whenever you trade derivatives, you don't actually own the assets, so you cannot withdraw them from the exchange you're using, meaning you trade them solely on the exchange alone, as you can see in this table from Binance. Also, all links will be in the description. Some of the popular derivatives in crypto are futures and options. And on Binance, you can trade quarterly futures and perpetual futures. This is what we're going to be talking about today in this video. First, I want to start with quarterly futures. What do we know about them? You know exactly when the contract expires, so you're betting on price by the end of the quarter. So on Binance, we're here on Binance page, you'll see BTC USD quarterly 0331. What does it mean? It means 31st of March. You can also see time to delivery is 46 days. So in 46 days, this contract expires. But there's also 0630. By the same logic, this is 30th of June. So if you're trading quarterly futures, they have no funding fee. So if you go long some quarterly futures on January 1st and let them expire on March 31st, you'll pay nothing in funding fees. But as I said, this is tailored for altcoin trading, and there's high probability that current altcoin that is shilled on Twitter by your favorite influencers, that they don't have quarterly futures on any major exchanges. As a matter of fact, on Binance alone, there's like 7 or 8 coins that have them on Binance, and they're all majors. So there's like Bitcoin, ETH, Cardano, Chainlink, for some reason Polkadot, Ripple. You get the point. There's not many. So now let's move to perpetual futures. So perpetual futures, they don't have an expiration date. Just like date says, a trader can hold it till perpetuity unless he get potential liquidated. Think of it as a never-ending cycle of 8-hour windows. Since they don't have a fixed date of expiration, exchanges have a mechanism to ensure that future prices and index prices converge on regular basis. This mechanism is also known as funding rate or funding fees. As you can see, this is the price, or market price, and index price. You can see the price is very close to each other. We'll get to that in a second. So funding fees are periodic payments either to traders that are long or short based on the difference between perpetual contract price and spot price. Therefore, depending on open positions, trader will either pay or receive funding. Majority of you watching this video are trading perpetual futures anyways on altcoins. So let's do a quick run-up. Funding rates. So again, it is a periodic payment. Think of it as a cost of having position open, and it is calculated as delta between perpetual contract price and spot price. For the most part, you will see funding of 0.01% every 8 hours because people can arbitrage between spot and futures market easily, so the spreads are naturally pretty narrow. Keep in mind that funding rates also differ across different exchanges, as I'll show you in a second. So maybe on Binance you'll have one funding rate, but or on another exchange it will be slightly different. If funding rate is positive, it means the perpetual swap is trading above spot price, and on the contrary, if funding is negative, it means that the perpetual swap is trading below the spot price. This is very, very true for crypto Twitter. I don't want to say the word not to get like deleted off of Twitter, but a lot of people on Twitter saying, oh, funding is positive, more longs than shorts, I go short. Please unfollow these type of people. They have no clue what they're talking about, and this is exactly why I'm doing this video. So what you should take away from this video, the emphasis is always focus on context, and I'm gonna show in a second. So I highly recommend page called Coinglass, where you have a lot of useful data and information, but we'll be focusing on funding rates. So as you can see from the get-go, there is all the symbols you could be trading that have futures and all the other exchanges. So you can see on Binance, it's funding different on the UIDX or Coinex, etc. So this is current rates. So as I said, it's payment per every 8-hour cycle. If I click on 1 day, it will be 3 times that, right? Because 3 times 8 hours, 24. So you get the point. This is basically how much you would pay in this period of time. So what I want to show you, what you can do on Coinglass, you can click on Binance, and it will like line up or filter the coins by the highest negative funding. And if I do 1 year, right, your cost of being short, if the funding rate was to stay the same for the whole year, which is technically impossible, but just for this example, it would cost you 67% of your notional position. So yeah, keep that in mind if you're using leverage. Very deep into how funding rate is calculated. I'm gonna also leave this link. It's very advanced how you calculate premium index and clamps. In my opinion, it's really not relevant for this example. So now let's go to TradingView so I can show you the difference between spot and per price. For this video, I've picked an example of Dusk, which was a very popular coin. So in TradingView, you can have, this is a spot pair, right? Dusk USDT. But below, I have Dusk USDT perp. So if you don't know how to add them, you can just type Dusk USDT, or you add perp. I have them both highlighted. Right? So at the time of this recording, we managed to slide lower in terms of prices on Dusk, but this is a screenshot from just yesterday. So the above, you can see this is spot price was 0.274, but perp was 0.265. So clearly the price is quite different, right? What I also recommend, if this is a bit difficult, you can add like a pair trade here, which will show you like the divergence or the spread between spot and per price. So what do? You have Dusk USDT, you divide it by Dusk USDT perp, and this is what you get. Let me show you what it does. So this is, sorry, let me move this. This is your difference between spot and per price. So if spot price is higher than per price, funding will be negative. So as you can see, these are the points where the funding was the most extreme. It went up to 15% divergence, which is actually crazy. I hope it is this example is clear. I've put a line at 1.00. This is where the price converge and funding is flat. Now, something a bit practical. Funding, as I've said, is something that occurs every 8 hours. So I highly recommend either writing down, or you will remember this, writing the times where funding actually takes place. These are the times for my time zone. So if you want to do UTC, you just remove 1 hour, like London sessions. So for me, it's 1 a.m., 9 a.m., and 5 p.m. I want to show you something very interesting, because what happens to price very often is that people trade around these funding hours, right? Funding payments. So in all of these examples on dusk, funding rate was extremely negative, meaning every 8 hours, if you're short, you pay quite a bit of money. To be fair, it was up to negative 1%. That means every 8 hours you would pay 1% notional size. So what do you see people do often with these examples? Price goes down. So right before funding, you'll see very funny price action very often. So here funding was very negative. So if you're short, you want to exit your short right before the payment, because what you can do technically, let's say you're short from earlier, you can close your short in profit or in a loss, does not matter. Let's say somewhere around here, funding hits, and then you can re-enter the position. So what people often do, what I've seen a lot on Twitter or on Discord, what people try to do is they try to go long if funding is negative, so like to get the 1%, right, to get the profit. Well, I mean, this is not a huge dip, but you'll find a pattern, just something to look out for. It's been almost 4% move, 3.5. So if you don't want to be completely autistic like I am to do these lines individually, there's also a funding bars indicator in TradingView. 1 second, why it's not showing? Yeah, so it shows it for you. So there's several ways you can see the data if you want. As you can see, it matches perfectly. So now let's go to Coinalyze. I have a couple more examples. So Dusk was a popular coin, a ZK sync narrative, very strong bid all the way through. And I've made this line, vertical line, to show you where funding actually flipped negative. We'll be focusing on this pane below. So where funding flipped red, this is where it goes negative. You can watch the figure here where my mouse is right now. You can see it went from flat, 0.01, all the way to minus 1.4%, which is quite crazy. And I just want to show you something, because this is something you'll see on Twitter a lot, or Discord. People say, oh, funding negative, go long, this is going to squeeze. Yes, in this example, that's exactly what happened. We see price run up, quite crazy price run up, right, with open interest and CVD going up, like everything is bullish, right? And funding is going more and more and more negative. But it gets to the point where price starts rounding up, but also volume starts rounding up and open interest as well with CVD. So it gets to the point where, oh, sorry, my bad. No clue what happened here. So the funding was extremely negative, but the market still sold off. So that's something what people say, oh, don't go short, it's a negative funding. I mean, this was 5, 10, 15% move. I mean, you get the point. That was a decent short trigger. So for this, I can give like an advice or like a tip. Funding can stay negative for a very long time. You can see from like this run up to peak, it was 2 hours, over 2 hours of, 2 hours of highly negative funding. It was a good short. So what I try to keep in mind, how big is the market cap? Specifically, Dusk is a very small cap, so I was not trading it or trying to fade it, as probability of getting squeezed is much higher. But also, when is the next funding payment? So if you look at the bottom, we can see the time. Next funding payment was actually here at the bottom. So you could have entered short without paying funding and still capture a massive move. So yeah, hopefully this video was useful. Don't be the guy saying, oh, negative funding, this and that. It really is not such a big deal. Thanks for watching, and